Welcome to Talk Dickers, where we break down the earnings calls that matter. Today we're jumping into Cimpress. That's ticker CMPR. And wow, did they just deliver a quarter that really made Wall Street sit up and take notice.
So let's get right to it. Cimpress basically dropped a bombshell of an earnings report. I mean, they didn't just beat expectations, they crushed them. They raised their guidance, and they sailed right past $1 billion in quarterly revenue for the first time ever. Now, the market gave it a nice little pop, but not a huge one. And that leaves us with the big question. What's the real trade here?
All right, first up, the headline numbers. Adjusted earnings per share, right? It came in at $1.95. The consensus on the street was $1.61. Folks, that's not just a beat, that is an absolute statement. A 20% beat tells you that something is going very, very right under the hood.
And it's not just the bottom line. The top line story is just as impressive. Revenue smashed through that $1 billion milestone, beating what everyone expected by almost $47 million. But you know the number that gets me really excited? That 4% organic growth. That means even when you strip out all the weird currency effects, the core business itself is growing at a really healthy clip. That's real demand.
So you have to ask, what is fueling this growth engine? How are they pulling this off? Well, it turns out it's not just one thing. It's this powerful combo of a really smart strategy and some seriously sharp execution that's finally starting to pay off big time. And when you look at where the money's coming from, well, it's pretty much everywhere. The core Vista business is still the big star of the show, no doubt. But the real story, the thing that's really driving this outperformance, is a huge shift in what their customers are actually buying. And right here, this is the secret sauce. Cimpress is getting its customers to move up market. We're talking beyond just the basic business cards and into these higher value, elevated categories like promo gear, custom apparel, and fancy packaging. Look, this isn't just about selling more stuff. It's about selling smarter. And the result, a 9% jump in gross profit per customer. That single metric is an absolute game changer. But wait, the story doesn't end there. It's not just what they're selling, it's how they're doing it. They're getting incredibly efficient on the back end. They're using a centralized fulfillment network, leveraging AI to keep a tight lid on expenses, and making these small, smart acquisitions to add new capabilities. I mean, this is a company that is just firing on all cylinders right now.
Okay, so when you're executing this well, what do you do next? You raise the bar. This incredible performance is giving management the confidence to aim even higher. They're not just taking a victory lap, they are laying out a bold, multi-year plan to create some serious value. And here's the proof. They're putting their money where their mouth is, boosting the full-year outlook across the entire board. More revenue growth, more adjusted EBITDA, and more free cash flow. This is management basically shouting from the rooftops that this strong performance is here to stay. But they're not even stopping there. If you thought that was good, they're looking even further out, reaffirming this really compelling long-term vision for fiscal 28. We're talking $600 million in adjusted EBITDA, $200 million in net income, and getting their debt way down to a much healthier level. This isn't just a goal, it's a clear roadmap.
Okay, so that brings us to the most important question, right? With all this good news, a killer quarter, and a confident outlook, where does the stock actually go from here? Let's break down the two sides of the coin, the bull case and the bear case.
All right, on one hand, the bull case is pretty straightforward. This shift to higher value products just keeps expanding their margins, their tech unlocks even more cost savings, and those ambitious 2028 targets suddenly look very achievable. But there's always a but, isn't there? The bears are pointing to one little dark cloud in this otherwise sunny report, a dip in gross margins. They were down 1.1 percentage points, and that eats directly into profit. Plus, they'll argue this is still a business that could get hit if the economy slows down.
So, where do we land on this? Well, after weighing both sides, we are firmly in the bull camp. For us, the momentum they have in these higher value products and the real, tangible progress they're making on efficiency, that growth story just outweighs the margin pressure and the macro risks. And you know what? We're not alone. Analysts are already starting to raise their price targets. Truist just bumped theirs up to $100 a share.
So, let's wrap this up with our final call. Here's the key takeaway. Cimpress is not just a cyclical printing company anymore. It is successfully transforming itself into a tech-enabled marketing partner for small businesses. We think the market is just starting to catch on to this story, and there's still a lot of room for this stock to run as that margin expansion really takes hold. We see it heading towards $83 in the near term with a really clear path to $100 as they keep executing on that long-term plan. This is not financial advice.